Hello everyone, thanks for joining us this morning and welcome to this educational presentation of trading tops and bottoms in virtually all markets as well as all time frames. Now I'd like to start out today's presentation by sharing with you this chart here. This is an LB and this is an older chart, but it really doesn't make any difference because you see this happen over and over again. This is the way most traders trade when they're trying to pick tops and bottoms. You get to a certain level, in this case a lower level, and you feel as if the stock is tremendously oversold. Maybe somebody in a chat room tells you that you want to buy this because the indicators have never been this oversold before. So you step in and you buy because obviously you don't want to be the only one left out not purchasing this if it makes new highs. And then this happens, okay? So at this point you're wondering, well, gosh, that really wasn't a great trade there, but maybe I got in a little bit too early. And perhaps you've taken one of those classes where they teach you what the institutions are doing and you have some newfounded support. After all, the institutions are the big money and they create the support and resistance. So you figure that this is an ideal place to buy right here because it seems to have some support there. So you jump in and you double down and then this happens. Well, it really doesn't go much higher. What happened to the support? Now you start to think, well, gosh, I'm in this for the long haul now. Maybe you got in just a little bit too early. Maybe actually this is the support because actually you've looked at the volume, you've looked at all the indicators, and everything seems to be coming into play. So what you want to do now is triple down because after all you need is just a small little bounce, even just to break even. So you triple up, you buy some more, and then this happens, okay? Does that look familiar to anybody, especially in this last couple of months with the market going lower and lower over time? Well, with today's webinar, this educational presentation, I'm going to share with you a technique I learned on the floor that actually in the same exact market using tops and bottoms could have potentially captured upwards of 40 points in your favor. And this is a technique I learned on the floor, and I want you to study and to really first paper trade this, but you'll be able to apply this as early as Monday if you'd like. And I'm going to share with you how simple it is to apply this using our new platform, the PTS Primo charting platform I developed with Pro Trader Strategies. This is the educational portal that makes trading simple because after all, trading should be simple. You shouldn't be overcomplicating your trading with too many studies, too many techniques, too many methods that are based off what someone or something else is doing. You should be basically keeping your trading as simple as possible. And you have over 40 years, actually 42 years of experience and simplicity all combined into one trading platform right here. So welcome. This promises to be a great educational presentation. My name is Steven Primo. If you're new to my webinars, well, we are all about educating you. That's our only goal. That's our only motivation, really, just to educate you because that's the one thing that is missing from most traders' trading plans. Think of it. Think of how you make your trading decisions. All right. Most of traders will make their decisions based off of what the institutions, what some indicator, what some volume, or what some $10,000 class is telling them what to buy and sell on a daily basis. Okay, I know this from firsthand experience because when I first started trading over 4 decades ago, this is the way I used to trade. I bought every system you could think of. I went to every course and every class. I spent tens of thousands of dollars trying to find the perfect way to trade. And that would be comparable to spending hundreds of thousands of dollars now. That was a good 40 years ago. And trust me, nothing worked. It wasn't until I was lucky enough to have some mentors on the floor that told me to simplify things and really to let go of traditional wisdom because traditional wisdom really doesn't work. There's no consistency in that. And this is the thing that changed my way of thinking and changed my way of trading as well. And I believe it's made me sustain me for being able to trade over 4 decades now. So this is why we're an educational company. Simply educate you so that you can make your own trading decisions. This is what makes a consistent trader. So you'll see the attention to detail we give in teaching you today in today's presentation in this technique I learned on the floor. But before we begin, once again, as always, we're first required by law to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of charts, different time frames, different markets using this technique. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples I'm about to share with you are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, I would also like to take this time, if you haven't done so already, I know we have a lot of followers, but if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. You may want to copy that down, abbreviation for specialist trading. I post different things on a daily basis, different signals that our strategies have generated, different techniques, as well as little bits of financial wisdom. So lots of great free educational information. Please feel free to follow us on Twitter. Okay, so once again, before we begin, I just want to really state that we are different from other presentations you may have attended in the past, and that our only goal is simply to teach you. That's all we're trying to do. We don't promise to have some system that never fails or loses maybe once every 5 years. We don't believe in that. We don't promise to tell you on a nightly basis what to buy or sell. We don't believe in that either, because all that serves to do is take you out of the game. And that's one of the next reasons why most traders fail, is because you're basically giving your power away. You're letting someone or something else make your trading decisions for you. And the reason is we've all been trained that. That's the way the industry is based, to, purchase this system that spits out nightly signals, or to go to this signal service that will tell you what to buy or sell, or to go spend your money on a chat room or a trading room that will tell you what to buy or sell. You're basically telling the markets, I don't know what to do. I'm not smart enough. I'm not educated enough. I don't have enough experience. So I'll let someone else do the work for me. And that's a recipe for disaster. That's why it's been estimated that 85% of all traders fail. The good news is that when I teamed up with Pro Trader Strategies about 10 years ago, our only goal was to teach you, so that you could make your own decisions, so that you wouldn't have to rely anymore on these faulty signals, on this inconsistency. And now, 10 years later, we have members in over 115 countries around the world and in virtually every state in the United States. So hopefully, we can teach you how to trade with the same edge that was taught to me some 4 decades ago. That's the specialist edge that is rooted in simplicity. Now, you're going to see the attention we give to teaching you today, but since this is a classroom, I want you to ask me as many questions as possible, but please wait till the very end. If you've attended my presentations in the past, you'll know that I like to take your questions, but at the very end of the presentation. If we stop for every slide the way some other presenters do, we'll be here far too long, and we'll open up a can of worms in terms of time. So let's wait till the presentation is over to ask any questions. The one question I will answer, once again, is the most common, and that is this being recorded? Yes, it is. Everyone will receive a link to this recording at the end of the presentation. So if you're having technical issues, if you can't see the screen or hear my voice, oftentimes if you log off and log back on, it's just your internet connection. But if you have to leave early, or if you still can't resolve the technical issues, we will send each and every one of you a link, okay, to this recording, so you can study it at your own leisure. So we have a good Saturday morning crowd. Once again, thanks for joining us. And if you joined us late, please wait till the very end of class to ask any questions. Okay, with that stated, let us begin today's class. I'm going to start off by sharing with you how most people trade tops and bottoms. And I'm not coming from this arrogant, condescending, teacher's point of view. I'm basically sharing with you how I used to trade. This is the way I first started out trading, because I was always taught to buy low and sell high. So let me share with you how myself, and I would say 99.9% of most people trade tops and bottoms, trying to pick a top or trying to pick a bottom. The first thing most people do is, as we look at this chart here in VRSN, is you want to pick some type of tool that defines what overbought and oversold is, okay? Now, this can be some type of oscillator. It can be some other indicator that maybe you've devised. It could be someone that you go see or listen to, a trading guru that tells you when something is overbought and oversold. Either way, it's just something that tells you the markets are too high or too low, okay? Now, we've just plotted here on our platform a standard slow stochastic. We haven't changed the settings. This is virtually on any charting software, so don't think that, I know whenever I do this presentation, my first question is, Steve, can you tell me what the settings are for those? I don't even know what the settings are. It's just a generic stochastic tool, okay? All you want to see is that when you have a threshold, as we see here, the threshold are right here and right here, these blue lines. I believe this threshold is at 80 on the indicator, and this one is at 20. So the way this works, traditional wisdom tells us that when we go into this so-called overbought area, over 80, this is where you want to sell. And usually it happens when these lines cross somewhere around here. As you can see, they crossed right here. So this would have been your sell point, all right, when you had clearly defined stochastics below each other, the blue line below the red. And it could have been anywhere up here, but somewhere around this level you would have been selling. And that worked out very nicely. As you see, the stock started to go lower. So what you want to do is track this until we get into the so-called oversold area. And once the lines cross over, that's your indication to buy. So you cover your short, and then you buy and you go long, okay? So now you go long, you wait, it takes a week or two before the stock starts going up, and now you're making money again. So you wait for stock following this so-called overbought, oversold tool to tell you now that you're overbought. You wait for the lines to cross, and now you're in the area to sell. Whoops. So you sell, and you figure this is so easy. I'm going to be a millionaire in 6 months, right? And this is the way to trade. And I wish I had known this earlier. I would have retired maybe 10, 20 years earlier. I started trading this way, and right off the bat, I had winners, and I thought, this is so great. Boy, I'm going to be a millionaire in just no time. Then look what happens. You sell, but this time it doesn't go down, okay? So, not to worry, you've already had a couple of good trades under your belt. You've got a cushion, you've got some money in your pocket, so you figure, oh, that's all right, I'll sell some more. So you wait for the lines to get over into the bought area again. You wait for them to cross, so you sell some more, you double up, and it goes up even higher. Well, now you're starting to worry. You're saying, well, wow, I've given back everything I made, but that's okay. I'll triple up because look at the lines. They're crossing again. We're still overbought, right? If we were overbought down here, we really got to be overbought up here. So I'll just sell some more. And now this time, I don't need it to go down that much, even just to break even, because I've got triple the position I originally had. So you decide to sell some more, and it kind of goes nowhere. It doesn't really go up that much, but it doesn't really go down. So you're still not making any money. So now you're starting to worry. Now you're starting to hide the statements from your significant other. Now you're starting to say, boy, this is not working the way the first 2 or 3 trades work. But you hang in there. In fact, you decide to quadruple up because it's got to go down one of these days, right? And then look what happens, okay? Once again, I'll ask the question, does that look familiar to anyone? I know it does to me because that's the way I used to trade. I would have 1 or 2 really good trades, and then I'd give it all back. That is not the definition of consistent trading. That is really more along the lines of gambling. You know, you hit a jackpot here or there, you go back to the slot machines or you go back to the tables, and you give most of it back, and you're hoping to make it work again, okay? So that is not the way trading should be. Now, this is what my mentors taught me, and it was very difficult to absorb, and it was very difficult to set in, but this is one of the first things they told me. They said, Steve, you have to understand there is no such thing as overbought or oversold. And it went against everything I had ever been taught. I mean, we're always taught that something is too high, you want to sell it. It's gone up too quickly. All the indicators are overbought, you want to sell it. And if something has gone down too quickly, if it's way below its fair market value, it's oversold, you've got to buy it. But my mentors, who have been trading roughly about 40 years each, came up to me. They saw how much I was struggling. They said, Steve, the first concept you must learn and understand if you want to be trading next year, if you don't want to give all your money away, is that there's no such thing as overbought or oversold. We've been sold a bill of goods, but it's a myth. Because think of it. How many times have you seen a stock, a future, a currency pair go up and continue to go up for days, weeks, even months, and continue to be overbought? It just keeps going and going and going. Or how many times have you seen something oversold for weeks, months, even years? You remember Enron? It was oversold, finally went down to 0. So there is no such thing as overbought, oversold. It really is trying to catch a falling knife because you don't know how low it will go or how high it will go. So once I fully absorbed this and I said, okay, at first I didn't, and I continued to trade the way I like, and I didn't show any results for the next couple of weeks or months. Finally, I said, okay, so if there is no such thing as overbought or oversold, then what is the right way to trade overbought or oversold markets? And their answer was to simply go with them. So this is the technique I'm going to be sharing with you today. How to trade tops and bottoms by going with them instead of trying to pick a top or a bottom. Now, once again, this is not a strategy. I've been saying since the very beginning, this is a technique. A full-fledged strategy tells you exactly where to enter, tells you exactly where to exit, exactly where to place your stop, how to track the trade, money management. We're not talking about that today. We're just sharing with you this technique which really spotlights and highlights these high probability entry points of trading with overbought and oversold markets, okay? All right, so let's look at our example again, VRSN, all right? Once again, as it was going higher, what were we trying to do? We were trying to pick a top because obviously it was so overbought, right? But now that we know there's no such thing as overbought or oversold, how do we trade this? Well, here's the first rule my mentors taught me. The first thing you apply is the buy-sell line. On our platform, it's really simple. All you have to do is go to the green strategy tab and click on buy-sell line. And automatically, you have a drop-down menu and you have a choice because the buy-sell line is just a 50-period moving average. Now, we have a number of ways in which to view it. Let's pick the simplest one, which is just the 50-period simple moving average. And the reason why we call it the buy-sell line is because it tells us whether we should be buying or selling. If price is above the buy-sell line, we're only going to be a buyer. If price is below, we're only going to be a seller. So ask yourself, where is price in relation to the buy-sell line? Well, price has always been above. So there's no reason we should have ever thought of selling this because we're going against the tide. We're swimming upstream. You should only be in sync with what the market wants to do. So if we know we're only going to be a buyer, okay, great. So we're not going to try and pick a top. We're going to try and buy with it. So how do we do this? Well, remember, the first thing my mentors taught me is there's no such thing as overbought, oversold. They don't exist. So since the majority of traders trade off this, let's exploit it. So going back and using our standard stochastic indicator, okay, our oscillator. And remember, it doesn't have to be a stochastic. I know many of you are going to ask me, well, Steve, what stochastic was that? Or what are these settings? It doesn't matter. It could be any other oscillator. It could be any other tool. It could be something that you've devised. It could even be somebody who puts out a weekly report telling you what's overbought, oversold. It makes no difference. We're just going to exploit it. All right. So in this case, we're using a standard stochastic. And since we know there's no such thing as overbought, what we want to do is exploit when a tool tells us it's overbought. So we want to first identify all of the traditional overbought areas right here, right? That's every time the indicator goes above the 80 threshold. We're supposedly supposed to be overbought. Well, if we were overbought right here, boy, we must be really overbought here, right? So we're going to exploit that. Once we have located where the traditional overbought areas are with this particular tool, then we want to identify where the short-term tops were that were created. Because most likely, they're not going to hold. They're going to be traded and exploited in this fashion. Now, these were the tops that were created while we were overbought, okay? A top was created here. Another one by these short little green lines. What we want to do is exploit that. Every time we trade 1 or 2 ticks above, we're going to be a buyer. Now, we always tell our students, if you take this technique and you decide to trade it and put your own rules for exiting, for stop placement, you always have the most advantage of making and capturing the most potential points by taking the first setup, the first signal, which would have been here. So had you taken this very first signal, potentially you could have captured 14 points to the upside. Now, this is a much better result than the one you had previously. You had a couple of good trades by picking a top or a bottom, and then you gave it all back by using the same technique. Remember, trading should be consistent. Consistent means a 2-step forward, 1-step back approach. You're not trying to hit home runs. You're simply trying to hit singles. It's the traders who want to go for the big home runs, who want to, buy high and, I should say buy low and sell high. That's really a gambling mentality. You're looking for that, that jackpot. And sure, you may hit that every once in a while, but most likely you're going to give it all back. So that's not consistent trading. In fact, that's not trading at all. That's just gambling. We're not here to be gamblers. If you want to be a gambler, just go to Las Vegas or just to any casino. But if you really want to be a professional trader, trade like a professional, you have to be in sync with the market. You can't go against the market. You can't try and say, well, the market will go no higher. All my analysis says it's topped out. Or the market will go no lower. All my analysis and everything I follow says it's bottomed out. That's silly. The market will do whatever it wants to do. Our job as traders is just simply twofold. First one is to figure out which direction it wants to go. Secondly, our job is just once we figured out the direction, we jump on board. That's it. It doesn't have to be any more complicated than that. You don't have to look at earnings if you don't want to. You don't have to look at economic reports. You don't have to look at what the institutions are doing. You don't have to look at some guy on TV telling you what he thinks the market's going to do. I mean, it's silly. Those same things were told to me that I should be trading that way some 42 years ago. And they didn't work then. And they're not going to change automatically and miraculously and start working now consistently. So just trade the chart in front of you. It's right there. It's simple. And this is a great simple technique in which to trade it. Let's look at that other example in LB, okay? The only way you would have lost money was by what? Was by trying to go against its overall trend. The overall trend obviously is down. So why would you want to buy it? Why would you want to tell LB that you will not go down any further? You're going to stop right here. That's silly. Who are you to say that? The market will do whatever it wants to do. Our job is just to go with it. So how do we go with it? Well, the first thing we want to do is apply the buy-sell line. Simply click on our buy-sell line tab, choose 50-period moving average, and now we ask ourselves, where is price in relation to that 50-period moving average? Price is obviously below. In fact, we knew well in advance, way back before we even fell out of bed, that the market was telling us, not some guy in a chat room, not some institution, not some volume indicator, but the market was telling us that we had consecutive closes below, that it wants to go lower. See how simple trading is? You don't have to have tons of rules and tools to be consistent. So if we're going to be a seller, there's no way we would have lost money trying to buy. So since we're a seller now, we want to exploit the so-called and traditional oversold areas, which are right here when the oscillator goes below the 20 threshold. All right. So since we've located where those areas were, now we want to identify the short-term bottoms that were created while we were in the so-called oversold area. And they're right here, as displayed by these short red horizontal lines. So once we trade 1 or 2 ticks below, that's your setup to go short. Now, remember, this is just a technique. You can buy an option, a put. You can have some type of sell strategy, to the downside. You can short the stock if you have enough capital. Or you can just say, I'm staying out of this because we're below the 50 and I don't like to short stock, so I'm not going to be a buyer. Either way, you're in sync with what the market wants to do, because had you taken the very first setup, that's 40 potential points you could have captured to the downside. Whereas before, all you did was continually lose money. So once again, do you see how easy trading is once you have the wind at your back? Once you're not swimming upstream, trading is a lot simpler. Sure, every once in a while, an overbought or an oversold technique will generate a great setup. You'll buy the bottom or you'll sell the top and you'll make tons of money. Trust me, I worked on the trading floor of the stock exchange for 16 years. While I was down there, I knew tons of guys who made money in a relatively short time, hundreds of thousands, maybe even millions of dollars in a matter of days or weeks. And every single one of those traders, those professional traders, gave it all back. They gave it all back. Some of them gave back within the next week or two. Others ultimately gave it all back because that doesn't work over time. So that's not a real consistent trading method to try and pick a top or bottom. I mean, there's no consistency in that. Once again, that's just similar to gambling. And I'm not here to teach you how to gamble. I'm teaching you how to be a professional trader. So ultimately, you can be trading 10, 20, 30, 40 years down the road. All right, so let's look at some more examples. Now that you have the technique under your belt, it's not that difficult. Let me share with you some examples, some more current examples. Some are going back to the summer. Some are just this past week or two, showing you how you could have applied this. All right, this goes back to the summer in AMD in July. All right, you would have lost a lot of money trying to short this stock. Why? Because it's telling you it wants to go higher. So why would you want, if it's telling you it wants to go higher, why would you want to buck the trend? Someone would say, well, how would I know it was going to go higher back here? Well, all you had to do is apply the buy-sell line. Remember, it's as simple as applying the buy-sell line, and you've seen the whole time that we've been above the buy-sell line, the 50 period. So you didn't know how high. The buy-sell line doesn't tell you how high or how low something will go. It just tells you whether you should be a buyer or a seller. So now that we know we're only going to be a buyer in AMD, we're not even going to consider shorting it. We want to exploit the so-called overbought areas right here. So we locate those, and then we identify the tops that were made while we were in so-called overbought. And since we know there's no such thing as overbought, we want to exploit that and buy every time we trade just a little bit above those tops. Had we taken the very first setup, 14 points to the upside coming into September, October, in about 2 or 3 months. Okay? Let's look at a downward chart here in IBM. This is in September coming into the end of December, just last month, a little more current. All right, someone will say, well, Steve, sure, it's obvious to see that IBM it was in a downtrend, but I would have liked to know somewhere around here that it was going lower. Well, It's not that hard. All you have to do is apply the 50-period moving average, and guess what? At this point right here in early to mid-September, you knew that IBM, not some guy in a chat room, not some guy on TV, not some earnings report, but the stock was telling you it wants to go lower. That's the only thing you should be listening to, the stock, this chart in front of you, or the market, the future, the currency pair, the commodity, because it's telling you what it wants to do. And then once you know what it wants to do, you have to jump on board. This particular technique is going to exploit so-called oversold areas. As we identify them right here, now we just have to locate where the short-term bottoms were right here. Remember, we only want to look at the bottoms that were created when we were in the oversold area, because those are the areas that are going to be exploited. Because once those are broken, people bought at those areas thinking, well, this is the bottom. And once that bottom breaks, well, they're going to sell and panic, and that's going to be to our advantage. Now, if we take the very first setup right here, even though we gap lower, that's 20 points in our favor coming into the end of December, last month. How about TRIP? Well, this is a great example of how to follow this tool when sometimes it's not giving you clear examples. Now, someone looking at this would say, well, Steve, initially we're kind of just going sideways, then we started to go up, so how could this help me? Well, first thing we want to do is add the 50 period. And we see here that in October, coming up to the beginning of November, the market wanted to go lower. So if it wanted to go lower, we want to be a seller, right? We don't want to buy. So this is where we'd sell because we're in the so-called oversold area, all right? So we'd sell right where this low was, okay? But we never went below that low. That's why you want to wait for it to trade below there. Since we never went below there, well, guess what? You never traded it. There was never a low created because we were never in the so-called oversold area again. Now look at this. We have a overbought area right here. So that would mean we're going to exploit the overbought areas. But that can only happen if the price is above the 50. In other words, we're going to be a buyer. We can't buy below the 50. So there's no trade to be taken here. In fact, we didn't even have a top that was created here. So nothing would have taken place from the beginning of October till the end of October. But look what happened right here. Okay? We are now above the 50, so we're only going to be a buyer. That means we exploit the overbought area, and there's a short-term top. Okay? And look what happened. Once you traded above, 15 points in 3 days. Now, I know a lot of you would say, well, gosh, Steve, look we were oversold here. I could have bought back here at 43.5 instead of buying 10 points higher. Remember, that is a gambling mentality. We're not trying to pick tops and bottoms. I'm trying to teach you to be a consistent trader so that you can be trading 20, 30, 40 years down the road. I'm not trying to find these golden nuggets, these jackpots, so that you can have a good trade one month, and that next month you'll be lower in your P&L than you were the prior month. I don't want to do that. What kind of a mentor or teacher would I be if I taught you a method that gave it all back weeks later? I'm trying to share consistency in you. So don't worry if you miss a couple of really nice bottoms or really nice tops you could have traded, because it's all about consistency. 2 steps forward, 1 step back. And in 3 days, to potentially capture 15 points, that's not a really bad trade after all. How about STZ? Okay, this stock has been going down since October all the way into the end of December, last month, just a few weeks ago. Obviously, once again, someone could say, Steve, this is so easy. I don't need someone to tell me it's going lower. I need to know up here that we're going lower. Well, we apply the 50, and guess what? You would have known in the middle of October with consecutive closes below not to buy this. So this is how simple this tool is, and you don't have to purchase anything. It's right there. Everyone on your platform, regardless of what trading platform you use, should have the ability to plot a 50-period moving average. So you're going to know right away whether you should be a buyer or a seller. Now, if you are using stochastics, remember you can use any overbought, oversold tool. Well, since you're a seller, you want to exploit the so-called and traditional oversold areas. So you just locate where they are, and once they're being generated, then you identify the bottoms. And there were 4 actually right here, okay? Had you taken the very first one, well, in mid-November, you could have gone short STZ and potentially captured 40 points to the downside. Now remember, I know a lot of you are saying, gosh, Steve, this is great, but where do I exit? Where do I place my stop? That's what a strategy tells you. All we're doing today is sharing with you a technique for high probability entries. We're just giving you one piece of the puzzle. Now, looking at Tandem TNTM, obviously, you would have lost money trying to short this, right? But trust me, this is the way most traders trade. It's going up, that's great, but it's gone up too high. I mean, look at how overbought this is. Well, we were overbought right here, according to this oscillator. How well did that work? Okay, and we got overbought right here. Okay, how well would that have worked? And we were overbought all right here. How would that have worked, trying to sell that overbought area? Okay, you see how silly and inconsistent trading tops and bottoms the traditional way is? It'll give you a winner every once in a while, just like the slot machines in Vegas. But they're designed to give you a winner every once in a while to keep you there. Because they know ultimately if you continue to gamble that way, you're going to give it all back. And it's no different from trading tops and bottoms. Ultimately, if you keep trading this way, you're going to give it right back. Take it from somebody who traded this way. And I could never, get out of the red. I was constantly losing money. Now, we knew in advance, well in advance, that we should have been a buyer of this, okay? All the way back to May of last year, the market was telling us, not some guy in a trading room, not some economic report, not the earnings, but the market was telling us, well, it's above the 50, so you should only be a buyer, all right? So now that we know we're going to be a buyer, we're going to exploit the traditional overbought areas, which are right here. And every time we got in the overbought area, we want to identify where a top was being formed, all right? And now all that's left to do is to buy once those tops are exploited. Had you taken the very first one right here, 40 points you could have potentially captured coming into September, October. That's how simple it is to trade with the market. Once you release what my mentors call this useless noise that we've been taught to rely on, that really has no consistency at all in it. Now let's look at some other markets, because I know not everyone trades stocks. Some people trade ETFs, currency pairs. Some people are intraday traders. Let's look at some other time frames, some other markets, just to show you that this is not just a stock trading technique. It can be applied to any other market, any time frame. Let's look at the ETF here, IWM. This is the ETF for the Russell 2000 index, okay? 2,000 stocks that make up that index. Now, what a lot of students of mine like to do when they trade this technique is they don't actually like to trade the actual stock or future or currency pair. What they do is they use it as a market directional tool. So what they'll do is say, well, listen, if I get a buy or sell signal in an ETF, well, that's basically telling me what the market's going to do. Then it gives me the confidence to trade something that I like to trade within that ETF or maybe within the market. For example here, this is just this last month, all right? Looking back, we all know what happened in November, December with the markets, okay? Here's the IWM really falling out of bed. Let's apply the buy-sell line. What was the buy-sell line telling us well in advance of the market sell-off in November, December? It was telling you it wanted to go lower. There was no reason to be a buyer. I can't tell you how many people contacted me in this rough market this last couple of months and said, Steve, boy, you must have lost a lot of money trying to buy. I said, no, most of our students were out of the markets or shorting the market since October. I said, well, how do you know that? I mean, how would you know it was going to go down? I said, listen, we're not a predictive company. We don't tell people how low or how high something will go up. All we want to do is be in sync with what the market is doing. And they said, well, how do you know what the market's doing? I said, just apply a 50-period moving average. The market tells you what it wants to do. So we knew well in advance that the ETFs, most stocks, the indices, the Dow Jones Industrials were below the 50-period moving average going back a couple of months. So we knew not to be in the market, or if we were going to be in the market, we were only going to be a seller. So if you're used to this technique, if you've been trading it, and you say, well, wow, I want to trade this on an ETF or use it as a directional tool, well, you would have known we're below the 50, so you're only going to be a seller. You're not going to think we've bottomed out when we were starting to rally right here. You're going to look at that as a point to sell. So since we're going to be a seller, we're going to exploit the so-called oversold areas, because we know now that there's no such thing as oversold. It doesn't exist. And look at this low that was created here, and another low was created here. This was in December, just a month ago, all right? Had you taken the very first setup, well, that could have potentially captured 15 points. Now remember, a lot of our students don't actually trade this. They just use it on ETFs or indices to tell them what they think the market's going to be doing. And had you seen that very first setup there in the middle of December, well, 15 points lower would have transferred over onto roughly 2,000 points to the downside in the Dow. So that's 2,000 points you could have had in your favor, knowing that the market was going lower. So this is a great edge to have in your favor just by discerning what the markets may be doing. Let's look at an intraday chart of the EMini futures, okay? Obviously, the EMini on a 10-minute time frame is going higher, all right? Someone would say, well, how did we know it was going to go higher? Well, we knew way back here that it was going to higher because we had consecutive closes above the 50. At this point, it wanted to go lower, but once we crossed above, we're only going to be a buyer. We're not even going to think of shorting the E-mini on a 10-minute time frame. So if we're going to be a buyer and we're going to use this particular technique, we have dozens of techniques and strategies and methods. If we're going to just be using this one, we want to exploit the so-called overbought areas. And there's a lot of them right here. If we were overbought right here, think of how overbought we were right here, and think of how overbought we are right here. It's silly to believe in these things, right? So since the majority of traders are taught this is the way you trade, we're going to exploit that because we know the majority of traders fail, and we're not trying to root against anybody. We're just trying to exploit an edge. So here's where all the tops were created. All we have to do is simply buy before. Now, had we taken this very first setup here, which I believe was the 3rd of January, just a couple of weeks ago, or less than a couple of weeks ago, you would have purchased that one. Had you held on long enough, you could have potentially captured 86 points in the E-mini, all right? That's over $4,000 per contract, about $4,300 per contract. And we're not saying you would have held that long, but that's how much you potentially could have captured using this simple technique that you've fully learned today. How about currency pair traders? Any forex traders out there? Well, here's a chart in the euro yen. Okay, this is a daily chart on our platform because we have data for all markets, all currency pairs, commodities, Toronto exchange, Indian exchanges, the DAX. Here we're looking at the euro yen. Now we're having a difficult time here because we're kind of going below and above, but at this point we're consecutively below the 50 period, and we have the so-called oversold area. You see, even though here we were below, we weren't in the oversold or even overbought. But at this point, we started to become oversold, and it coincided with being below the 50. So this is making for a great setup to go short, okay? Had you taken that very first setup right here, which was in the first week of January, that would have generated 660 pips to the downside in 2 days. That's over $6,000 per contract, okay? So you've seen how this can be applied to futures, currency pairs, intraday trading, stocks, ETFs. It makes no difference. All we're trying to do is exploit the way most people trade tops and bottoms, which in our opinion is faulty. There's no consistency in that. So let's recap before we go to question and answer portion. Remember, just as my mentors taught me, here's what I'm trying to teach you today to get you on that path to consistency. If you're going to absorb anything that I've taught you or in any of my courses, the first thing we say is there is no such thing as overbought or oversold. It does not exist. So get that out of your head. I know you're going to want to hold on to that. You've all been trained to think that way. I know I was. When my mentors first taught me this some 42 years ago, I didn't accept it. And I went on for a couple of more months of trading until I finally saw that, okay, I've lost more money. It's not working. So, okay, I'll give it a try. So once you finally accept that concept that there's no such thing as overbought or oversold, well then never ever try to pick tops and bottoms the traditional way because you know it's not going to work over time. It may work every once in a while, but we're trying to generate consistent income. We're not trying to have 1 or 2 golden trades and then give it all back. That's not trading. So ask yourself, as we go into the end of the presentation here, do you think this edge could have helped your trading this past year? We just started 2019. What if you went back an exact year ago today? It was 2018 though. You think it could have helped you for the entire year of 2018? I just showed you things that have happened in the past weeks, how well you could have used this technique in the last week. What if you would have had the entire year to use this? Well, if you like this technique, let me share with you a great offer we have for all the attendees today. This is a great offer and a great discount. This is our Secrets of a Stock Exchange Specialist video seminar, all right? This is 3 hours of trading techniques plus a full strategy. So what I share with you today was just one of the techniques. We have tons more of techniques in this 3 hours of trading plus a full-fledged strategy. Let me share with you what that strategy is. That's strategy number 1. It is completely different from what I shared with you today. Remember, what I shared with you today was a technique, a high probability trading technique that simply highlighted an area for entry. But what's different from that within a strategy is that a strategy will tell you exactly where to enter, exactly where to exit, exactly where to place your stop, and ways in which to manage the trade and use money management. Now, this is strategy number one. This is one of our most consistent pullback strategies. Let me share with you what I mean here. It's entirely different from the technique I share with you, because the technique I just shared with you was a momentum or a momentum capturing technique where we look for something to be going in a certain direction and then we jump on board. Whereas a pullback is entirely different. We're looking to buy lower within an overall uptrend and looking to sell higher within an overall downtrend. So it appears as if we're trading tops and bottoms, but we're not. Someone looking at this right here would say, well, Steve, we've hit a top. According to what you say here, we're going lower, so we've got to sell, right? Well, no, because this is an entirely different technique. In fact, it's a strategy. The strategy would define that the overall trend is up, and it generated a buy signal right here. Now, we tell you exactly where to buy, exactly where to place your stop, and exactly where to exit, but this technique potentially could have captured 10 points within the next couple of weeks. This is strategy number one. Do you see how it's different from buying as we're going higher or selling as we're going lower? The same thing works to the downside. Strategy number one is not looking to sell as we're going lower. It's looking to sell in a little bounce, but the bounce must be in an overall downtrend. Well, strategy number one generated an overall downtrend, so it generated a sell signal right here. And someone would say, but Steve, I thought if we're going up, you want to buy once you go above this. Remember, it's a completely different rules. So you would have had a sell signal generated here. You would have known where to enter, where to exit, where to place your stop, and potentially this trade would have been taking place just about a month ago, 25 points to the downside in the next week, the next 5 days, okay? This is strategy number one. You're going to get the complete rules to this course, included with a lot more high probability trading edges. We go into the difference of what the difference is between a system and a strategy. We tell you which indicators to use, which ones not to use. And remember, all the different high probability edges, as well as strategy number one, can be applied to any market and any time frame. And one of the best perks we have about this Secrets of a Stock Exchange Specialist video seminar is that you also get educational correspondence. You get my personal email. You can contact me anytime you'd like with any questions concerning what's in the video seminar. So this is a great package. Now, Pro Trader Strategies, my sister site, usually sells this for upwards of $1,000. There's so much information jam-packed into this video course. But we're not going to charge you that. We're going to discount it tremendously, $37 only. That's for a limited time. I believe it's only for this weekend only, for the next 24, 48 hours. So I would really take advantage of this. Remember, this is not something that needs to be shipped to you and you get in 2 weeks later. It's not a CD. You get a link. And it's a video course. You can watch this at your own leisure. You can watch this in your lunch break. You can watch this during the weekends. And it's 3 hours jam-packed with a lot of high probability trading edges and a full-fledged strategy, strategy number one. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They handle all of our tech support as well as the discounts with all of our courses. You can call them directly at area code 310-598-6677. But if you just want to sign up right now and take advantage of that quick $37 price, which most likely next week will be back up to close to $1,000, I would go to that link, that sign up page at the very bottom there. Now that link is not live, but they've posted a live link in the chat box. If you go to the far right hand corner of the go to webinar column, there is a chat box there that has the live link, okay? Now remember, as I stated at the very end of the presentation, I want to take each and every one of your questions. So feel free to go to the question and answer box and type them in. And remember, if you have any questions concerning the discounts, or if you want to purchase another strategy or more information, you can always contact Pro Trader Strategies. They would be more than happy to answer any questions. There's absolutely no obligation at all. They would be happy to answer any questions you may have about other strategies, our platform, the current deal we have, the $37 deal with the Secrets of a Stock Exchange course. Okay, a question here, strategy number one. Does strategy number one have to do anything with volume? No, it doesn't. In fact, strategy number one is an indicator-based strategy. It only has about, I believe, 5 rules and tops, and that includes where you enter, where you place your stop, where you exit. And it only uses 2 indicators, all right? And we use a proprietary indicator on one of them, and it's very simple and very basic. So not to worry. All of our techniques are very simple and very easy. In fact, there's another question. Someone's asking, I've only been trading for a very short period of time. Is this too advanced for me? No, this is so simple. I mean, that's one of, you look at our testimonial pages on either my site, specialisttrading.com, or protraderstrategies.com, you'll see testimonials from people who have just begun to trade, who have said, this is so simple, I didn't know trading could be this simple. I thought I needed much more experience. So there's a lot of great free information. Remember, as I stated in the beginning, trading should be simple. It shouldn't be overcomplicated. If you look at the traders who've been trading a relatively short time, 5 or 10 years, most of their trading plans are really complicated. A lot of indicators, a lot of rules and requirements. But if you look at the traders who've been trading 30, 40, 50 years, most of their strategies are very simple. We have a new strategy coming out in the following weeks that only has 2 rules, 2 requirements. So it's really, you've got to keep things as simple as possible. That's how you get to become a consistent trader, not by overcomplicating things. I mean, my mentors taught me, they said, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. It doesn't take a lot of character. It doesn't take a lot of education to do that. You can be trading 2 weeks and pile on every indicator, every trading requirement you can think of. But that's not going to make you more successful or more consistent. And they said it is the most difficult thing in the world to simplify your trading, because that really takes a lot of character. That really takes a lot of courage to do, to let go of all the things that really don't mean anything, all the things that are useless in your trading. But once you do that, that's when you start to get on that road to consistency. So come on board, take advantage of this great $37 deal. And remember, this all comes with unlimited educational correspondence. You can contact me whenever you'd like. In fact, later on after this presentation, I will be answering emails from other customers that have taken our other courses. So I'm always in constant contact with our students, okay? That's the link you see there in the chat box. I want to thank you so much for attending today. I wish you the best of luck coming in the new year. Take advantage of this great offer before it goes back up to the price, okay? Thanks so much for attending. I wish you the best of luck and look forward to all of you becoming students of mine at Specialist Trading and Pro Trader Strategies. Thank you so much. Have a great weekend. I'll see you next time. Bye-bye.